Hello and welcome to Finextra. I'm Thea George and I'm here with Dominic Venturo of US Bank. We're at the Clearinghouse Annual Conference in New York and we're talking about the future of payments. Dominic, thank you for joining me.
Thanks very much for the time.
So you just participated in a great session here called Building the Future of Payments, and you got a great laugh with a comment about zombie products. Can you tell me what you think banks need to be doing to ensure they derive value from all the investment they're making in the future of payments?
Sure. So, my comment about zombie products was really banking as an industry. We have a tendency to hang on to a lot of products, and in some cases, those products do very similar things. So if you look at the US as an example, we have probably 4 or 5 different ways that you could make a payment. And yet at the same time, all you're doing is making a payment. And so what I was really trying to relay to the audience was when we're looking at product design and we're investing in new technologies and new infrastructure, at the same time we're doing that and solving problems for the customer, we also have to think about what product does this replace, and then what is our strategy to phase that product out over time. Otherwise, you end up investing in both, the old and the new, and you don't see the efficiencies sort of play out the way that they might have.
So how do you think we'll see payments becoming more contextual?
So if you think about today with payments, they're very purposeful. So you decide that you're going to buy something, and then you ultimately then go through a series of machinations to actually make that payment happen. Whether it's Apple Pay or an Android Pay and a touch and a tap, or whether it's approving a payment inside of a mobile banking app or the like. From a contextual perspective, what I was really referring to is thinking about a future where when a transaction needs to happen, that you've set up with a known set of providers, that you have the ability for that to happen, provided it's within your rules that you've created, and you might get communicated that it happened. So thank you for buying this at this at this store is the message that you would receive, so that you have the transparency to know that you had it, but you didn't have to go through those other steps. So depending on what you're trying to do, there are places where that might make, right? Took a ride-sharing service, the payment just happens. Took things through the self-checkout and walked out the door with the bag of groceries, the payment just happens, as opposed to the way it works today where you have to stop things, make a payment, and then get back on with your life. So how do we get there? When I look at what's happening in the industry, we're getting there in small slices. So part of what the banking industry has done a great job of is creating the capabilities, especially in retail merchant payments, to allow for some of that seamless transition to happen. Where we have the opportunity with the build out of the real-time payments infrastructure and enhanced capabilities is to extend those. Now, the financial institutions won't do this all by themselves. I expect that financial institutions like US Bank or others will create capabilities for others to develop products and solutions to their platforms, not unlike what we're seeing in Europe and elsewhere in the world, and that will then begin to make things more seamless overall, and importantly, more secure, because you're able to use tokenization and other practices to preserve the integrity of that payment data and keep it secure for the customer.
So there was a lot of discussion during the session about the Internet of Things, and that segued into a discussion on data privacy. How do you think that situation is going to pan out?
So when I think about data privacy, you start with just this basic concept of privacy by design. And what I mean by that is if you were able to only acquire the information that's needed to complete a task, and whatever information you're going to gather or a merchant gathers or a website gathers, is shared with the consumer. This is the information I'm asking for, this is why I need it. Then you have the ability to reduce the amount of data that's being stored in literally millions of places and devices, part one. And part two of that is there are situations where endpoint, a merchant website or a mobile app, doesn't actually need to know your personal information, right, in order to provide you a product or service. And so if there were a way for financial institutions to provide some assurance to the relying party, the merchant, that the individual is who they say they are, but at the same time protecting the information using tokenization or anonymization, you have the ability to reduce that risk. So I think that's an important role for financial institutions. Without it, what we end up with is every device, every system coming up with its own rules, its own privacy policies, and it's then up to the consumer to sort of suss out the details of that And that's a lot of work, and frankly, a lot of folks may not take the time to do that, and as a result, may find that their data is in places they didn't expect it to be.
Dominic, thank you.
Thanks very much for the time.
And thank you for watching.